Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It's actually January 28th right now, rather than January 26th that you're seeing here on the Deep Dive. This is from Friday's close, and I just wanted to use Friday's information given that it's Sunday evening before the markets are about to open. The market in question I'm going to be talking about this evening is natural gas, with the ETF being UNG. I'm going to state the obvious. If anybody trades natural gas, you know this. The short, intermediate, and long term are all pointed to the higher, and the technical rating, as far as all the different tools that we look at to give an assessment to the market, is also pointed higher. But there's a couple of things that are taking place here with such a strong market, so I want to take advantage of some of the data that we actually have. We're going to be taking a look at a support gap here in a second, but we'll leave that for the time being. And then on the patterns, we only have the one tool that has popped up here in the last couple of trading days, where we have a high from 2 trading days ago, and that was on the surge, which is more of a profit taking. You'll see what we're looking at here. First of all, let's take a look at the market, and you can see this. These are daily bars, and since the beginning of the month, essentially right about here, in the early part of the month, we sold off for a couple of days, and since that time, since the lows that were set on the 5th, it's been up and away. Now we've got a couple of highs that are all basically the same right now, and we're staying above this where right now is a support level to the market, but we have a gap. The gap is coming down to this particular level right here, and the resistance, the next major resistance on a daily bar basis, is up through here. And so I'll give you those numbers. The resistance is 3.442, and the support to the market is 3.037. Bottom line is that we've had such a big move in the market that it's more of a cautionary tale than anything else. Full disclosure, the systems, we'll just take a look here. The systems are long the market. So we're hedged here in crude oil, we're long in heating oil, natural gas, we have a long position, but we just got into those positions on Friday, so we have a very small profit, nothing to write home about. We've been jumping in, jumping out of this particular market, so the systems themselves are actually long the market with short-term systems. And so this cautionary tale here, when you see just the magnitude of the movement that we've been seeing in natural gas. So for the month, as of Friday, we have, as an example, the S&P 500, which is having a good month, is up almost 7.5%. Natural gas is definitely the leader of all the markets, considerably. When you take a look at it, it's up 19 and a third percent versus Hang Seng, which is number 2, which is up just 10 and 3/4. So there's a huge difference between what natural gas and virtually all the other markets are doing, specifically in the month. The other thing I want to show to you is some of the distribution charts that we actually have, this being one for natural gas, and this is based on monthly data. So you can see that we're in the box for the 19%, and we have something called CVAR, conditional VAR. Now it always shows a negative, but it really should be a plus or minus, and this is important to us, the 13.92. That's where I look for a market that is well ahead of itself, and that's the threshold. Anything to the right of 13, I'll just call it 14%, is a big month, and anything to the left of it is a good month, but not necessarily a huge month. And then when you get down to the negatives, anything below 14% on the month is a huge down month. So if we scroll down here, I have kind of an interesting graphic that I came up with a number of years ago that I don't really talk about too frequently, but 0 is this white dot right here. And then what we have is, on a historic basis, over a considerable amount of time, we have what is the average return on a monthly basis. That's the blue dot, and natural gas has had not the best of track record on the positive side, so you can understand that the average month is down about almost a percent. Now, average positive month is up 4.81%, and a standard deviation of total returns over the years, 14 years, we're looking at 6.29. The CVAR that I mentioned, here's the plus and minus, here's the plus side at 13.93. We are off the scale here, and we are now approaching some of our 14-year highs as far as best months. This is just for the calendar months. So again, here is January, this month, 19.36%, and the worst top 10 is at 21.35%. So we're closely approaching, over the last 14 years, a huge month in natural gas. So I just want to point that out. Now, it's a cautionary tale in that here's a 10-year seasonal chart for natural gas. You can see that we've been tracking very, very well here with the pop to the market, at least as far as part of January. But once we get to this point, which obviously we're at now, even though there's volatility here, we have a tendency to sell off here until the beginning of March. So we've got all of February that is typically bearish the market. If we look at the 5 years, just a smaller scale, again we're at a peak, and it typically very volatile, as you can see here in this graphic here, that normally it does sell off into to February. And when we get into early March, that's when things have a tendency to do quite well for us. So the bottom line here is that there's been a big move, and it's probably due for a little bit of a retracement. So the other thing I want to point out is the support gap. Because of the surge that we've had here, above that support level that we were talking about, here's natural gas. It is one of the larger ones here, where we have a 4.2% differentiation between the close on Friday versus that support level. And because there's not a lot of things in between, it could break through that and come back down to support. There's really not too much holding it up here. So that being the case, just beware of that. Again, full disclosure here on natural gas. Here we have a resistance gap. There's really nothing above the market for 8.5%. So what that's telling me is that we're in a unique spot. We've had a big surge. We're long the market. We're going to ride this wave as long as we possibly can. But I'm just pointing out that we're in a huge month, and we're looking at a condition where the market could, for the most part, continue higher, and there's little to prevent it from heading higher as far as this resistance gap. But if we flip back to the support, there's a head and tail to every coin. The downside is that there's very little support to the market as well. So the fact that we've gotten so far ahead of ourselves, just beware that you're going to have extreme volatility in this market with what has already taken place and what is potentially ahead of us over the course of the next couple of maybe a week or so, where until we start playing out with whatever is going to take place on the support side or the resistance side, there's just nothing really holding it there. So what you want to do is, if you're trading natural gas, I'll point out that our deep dive pro alerts, these are more pattern based, they are taking profits. In fact, it took profits a couple of days ago, at least in part. It's not releasing and getting rid of the entire position, but it was certainly looking for a surge high, which is generally a good spot for taking profits. So just bear that in mind. Just be very aware that if you're trading natural gas, you already know there's a lot of volatility. Well, if you're trading natural gas, just expect even more volatility here, given the lack of support and resistance in the two different directions, and obviously, as I pointed out, with the monthly returns and the historic returns over the last 14 years, that we're in, quote unquote, not necessarily uncharted territory, but we're at the higher end there. So bear that in mind, and let's see what does happen with natural gas over the course of the next trading week. So thanks for watching. We'll look at another market tomorrow.